Welcome back. Canada's big banks, of course, each reported fourth quarter earnings this week. It was quite a week. The lenders' results were mixed. For a review on the quarter and an outlook for the remainder of the year, it's fiscal 2025 now for the Canadian banks, we are joined by Ebrahim Poonawala. He's head of North American Banks Research at Bank of America, BofA Securities. Ebrahim, thank you very much for joining us. Let's begin with the biggest story of the week, and that's Toronto-Dominion Bank pulling its profit growth targets for 2025 amid, of course, the mess that it has found itself in the United States. What's your take on that?
So, good morning, and thanks, first of all, for having me, Paul. I think what we would say is it's not surprising. I think what you saw with Toronto Dominion, I think you saw the CEO succession announced a few months ago. And I think when we talk to investors, shareholders, I think there is a sort of pent-up desire. What they want to see is a bit of a deep dive in terms of what went wrong, what needs to be fixed, how do you turn things around at the bank. So I think, yes, it felt dramatic and drastic, and I think you saw the stock react a certain way yesterday. But I do think if you're the incoming CEO, Raymond Chun, I think this allows him to reset the bar, take his time in terms of doing an objective analysis of what needs to be done, and provide his vision to the street maybe by the middle of next year in terms of what this bank should look like from a growth or return perspective.
Right, you're referring to the investor day that he has pledged to hold by the middle, sometime in the second half of 2025. Not completely clear to me whether he's referring to calendar 25 or fiscal 25, but regardless, he is pledging an investor day. How important is that event to this stock, Ebrahim? What do you see happening with the stock between now and that investor day?
So two things, right? I do think the stock is discounted, and I think there is a group of patient capital that's willing to look past the 12-month horizon, that how we view the world in our stock selection, and look at this as something that's trading at 1.2 price to book, still one of the best retail franchises in Canada, and in a backdrop where there is a desire to own bank stocks, I think you could see some stock garner some interest given the decline. But we do think between now and the update middle of next year, it's going to be more or less, we find it hard to see how the stock on a relative basis outperforms the peers between now and then. And I think the bigger question which we asked on the earnings call yesterday is, what do we get out of this? I do think there's a risk that the eventual update may underwhelm, because where things stand today, and again, we just got the announcement yesterday, I'm not sure we're going to see big divestitures of core businesses. I think all of that stays intact. So again, it makes sense for the new CEO to do what he's doing. But in terms of, will this be a dramatically different bank from a business mix, earnings growth, ROE profile standpoint? I think the answer is probably not.
Let's move on to Royal Bank of Canada. That, I think, in the views of most investors and analysts, was one of the stronger sets of results in the quarter. It caused Royal Bank's shares to rise further. And there's now a lot of talk about the price earnings multiple on Royal Bank of Canada stock. It rose 2% yesterday. It's now trading at almost 14 times its expected earnings in fiscal 2025. Do you believe the stock is now fully valued?
So we don't, which is why we have a buy rating still on the stock. And again, as we said, good things in life come at a price. And I think when we think about Royal, this is one of the best ROE companies. I would draw a parallel in another stock that I cover in the United States, JP Morgan. That's a stock that trades at a premium multiple relative to the group, relative to the last 10, 15 years. And the same thing here with Royal, where you think about an ROE profile that could be 100, 200 basis points above where the group resets over the next year or two. I think there are a lot of areas in which the company should see idiosyncratic growth, improvement of ROE opportunities, be it the HSBC Canada acquisition, synergies tied to that, the turnaround of the US retail bank City National, and some of the other initiatives that you have going on. So you have a best-in-class franchise, very well diversified. They should benefit from this uptick in capital markets that we expect over the next year. And again, strong execution at the top.
Let's move on to Bank of Montreal. That was a loan loss story. The loan losses or the provisions to account for potential loan losses were much larger than investors were expecting. And this really plays into a cloud that's been hanging over BMO for a couple of quarters now, and that's the credit performance in its U.S. commercial lending business.
Sure. So you saw that. I think the stock reversed that initial sell-off, ended up strongly. And I think what investors took heart, and I think we are kind of on board with this, is the likelihood that we have seen the worst of sort of the negative credit surprises, both in terms of the P&L impact, but also in terms of the worsening in terms of the impairment loans. And I think part of that is, I think, again, I would remind it's still a really strong management team under CEO Darryl White. I think they've had now about close to 9 months of doing multiple reviews that they talked about during the earnings call yesterday. And I think the view is if we've seen the worst of credit, the ROE story gets better from there. And also remember, this is a bank with 50% exposure to the U.S. market. And given the optimism around the U.S. growth rebounding next year, this is one way for Canadian PMs to get exposure to U.S. growth.
Okay, let's move on to CIBC, which reported another set of strong results yesterday and was rewarded in the market for it.
So yeah, CIBC, it's been our top pick in the Canadian banks. It still is. I think CEO Victor Dodig and team have done superb execution over the last few years in terms of the consistency with which this bank has reported results, managed investments, and delivered what all is a peer-leading ROE, which should continue to get better. So in our seats, we view commerce, again, valuation still very relatively reasonable despite the year-to-date move, and execution that's been impeccable over the last year or two. And as we think about if the Canadian economy sees a cyclical rebound next year, it's probably one of the best ways for investors to gain exposure to that rebound.